Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Tuesday, January the 30th. The year's 2024. Let's talk trading. Coming back. These videos are for educational purposes only. Your results may differ from mine. Fellow traders, sometimes I'll get a message from a trader that's, been beaten up by the market. Let's just say they've suffered a loss or a string of losses. They've either blown their account or put a pretty big dent in it, and some are even on the verge of quitting. And so I want to talk about coming back. And the biggest thing about coming back is how you're viewing what's happened. And the thing is, each trade is a new trade, and the results of that trade are not dependent upon all or any of the previous trades that you've made. Now, since we're human, we're emotional creatures, and since we're dealing with money, that kind of adds fuel to the emotional fire if you are not careful, if you don't have yourself in check. And the thing is, most people say, oh, that's easy for you to say, or it's easy to say, but it's hard to do. But the thing that makes it difficult is you. It's how you are thinking. And so, what do you have to do to put your mind in the right frame? The main thing is that you have to approach each trade as a separate event, a separate and distinct event. Hey, fellow traders, Walmall is joining us for the call. Hey, Walmall, I was just telling traders about coming back and how, part of the steps of how to do it is that you have to put your mind in the frame that, each trade's separate and distinct, and you really have to then focus on that trade and that trade alone and not what's happened before, and basically stick to your plan. And I know you had a comeback day on Friday, and that's part of the reason why I picked this topic for today.
Yeah, Friday was I had a rough start, and you're exactly right, because what happens is there are going to be times when things are just not going to go your way. I mean, I went back, and I think I even told you this. I went back, and looked at all my trades for the day, especially in the morning when I was having some challenges, to say the least. And I didn't do anything wrong. I followed my plan. I did exactly what my plan said to do. And the market sometimes does that to you, where it just doesn't do what you want it to do. And and then what you got to do is you got to go and make a decision at that point in time. What are you going to do about this? Option number one is you can just say, you know what, not my day. As we used to say as kids on the playground, I'm picking my ball and bringing it home. I'm just not going to play anymore, right? And that's an option, and that's a valid option. But that option is only a good option when you haven't violated your rules. You haven't exceeded what you're allowed to lose for a day. You haven't exceeded what you're allowed to lose in your account. And because you always, right, traders, you always follow that rule, because of that, that's not a bad option to take sometimes. And so I was down to literally, I think it was ridiculous. I think I took like 4 trades, and 3 of them were losers, and I finally got a winner, and then I said, okay, maybe this is going to turn around, and then wind up taking another 2 losers in a row. And it's like, oh my gosh, what is going on here? Nothing I do is just whatever. and I hadn't violated my daily limit yet, and because of that, I could continue to trade, but I didn't have very much room. I had enough room to go and basically take one more trade, and if I took a loss on that trade, my day was done. My day was done, my week was done. I still would have had a really good week, but I would have had a bad day. I would have ended the week on a bad day. So I took the trade, and I didn't look for a trade. There was the trade there. I didn't look at the chart saying, I've got to find a trade. I got to go and find that perfect trade that's going to get me a win here. No, I just went and looked at the charts, watched the charts, said, there's my trade. I went and took it, and next thing you know, I won. It's like, okay, good. All right. So now I've got 2 winners for the day. I got probably about 7 or 8 losses. I'm still in the hole. But I followed my plan. I didn't go and start trying to do something crazy like, as you like to call it, a McGilla trade, to go and try and make up all your losses. No, I'm just going to go and trade what I'm going to trade. And I made the conscious decision. If I was going to go out that day, I was going to go out that day following my rules, and I'm going to lose what I'm willing to go and burn in the street. As they say, how much money are you willing? I think when you're trading, you have to go and say, the amount of money that you're willing to lose that day is how much money you're willing to pull out of your wallet this morning, literally go out to the middle of the street, throw it up in the air, and let people go and take it, or go and literally set it on fire. And it doesn't affect. You may not like it, but it doesn't affect your lifestyle. It doesn't affect your way of life. And that's what basically I did. So I went and did that, and the next thing you know, the market started to smile on me, and I started taking win after win after win. Again, not doing anything crazy, not doing anything different, just following my plan. And when it was all said and done, I had barely made my goal for the day, but actually I didn't make my goal. I almost made my goal. I missed making my goal by probably about 2 pips or something. And, but that's okay, I came back a long way. And when I looked at my trade efficiency, I've said here before, my trade efficiency is usually somewhere around, on a really not so good day, it's about 75%, and I have 100% days, not very often, but I do have them, like probably twice a month, where I'll go through the entire day and not have a single loss. But when this was all said and done, I think my trade efficiency was like 67%, 68%. Let me look it up. 68%. Not a very good day. But, at the same time, at the end of the day, I had more money than I had at the beginning of the day. And, I wasn't in the hole. And the most important thing, very most important thing is I never violated a single rule. And that's the whole thing about coming back. You cannot go and violate your rules, because the thing is, the moment you violate your rules, it's a moment I'm telling you, if it doesn't happen right away, it's going to happen, and you can kiss your account goodbye. Just say, in fact, just go and wave at it and say, bye-bye, it's been nice knowing you, and we have to go find something else to do for a living.
There's something you said there, I think, that might be key to some traders out there. And that's, you're only risking the amount of money that's not going to affect your lifestyle. And I think there's some traders who are trying to climb out of another hole that has nothing to do with trading. They see trading as a way out, and they're putting some unnecessary stress on themselves because of, they're almost in desperation mode.
Right.
And it causes them maybe to not see things as clearly as if they were just trading because it was a hobby, and it didn't, them being warm and dry and with a roof over their head and eating and gas in the tank, if your trading is supporting that, and it's not supporting that well, that's just unnecessary stress.
Yeah, I think, and you can go both ends of that too, because, I don't think you should ever be trading or consider trading to be, nothing but a hobby if you're trying to make a living off of it. You can't go to that extreme. But at the same time, there needs to be some stress. And the reason why I think there needs to be some stress is because you need to be able to keep your head focused and clear and be able to make decisions in the moment quickly and efficiently. And I think that if you don't go and have some type of stress on you that keeps you focused. Now, I'm talking about me personally. Somebody else may be different. But for me personally, I need to have some type of stress on me. Otherwise, I'm just going to go and, laissez-faire, as they say. And next thing you know, I'm going and just willy-nilly making my trades or whatever. It doesn't matter. So what? It's just a demo account. It's only play money. Who cares? The next thing you know, you're not being as serious as you could be. But at the same time, you cannot be putting the stress on the other end where if I don't win this trade that I'm in right now, my family doesn't eat. You can't have that stress either, and so you got to go find that happy place for yourself. And every person, I think is different. We talk all the time, why is it that you could give the same, give a group of traders the exact same method, same strategy, same risk profile, same everything, and how come like 90% of them fail and, and 2% are, make out? Well, I think part of it is because what we haven't done as traders is figured out where we sit on that. I would call it a stress line. Where do you fit on that stress line? Where do you go and say, this is where I'm going to sit. This is what I'm going to do when things don't go right. And, or even when things go right. Because then what happens is, oh boy, look, I'm up a pip and a half. I'm getting out now. I got money in the bank. Yay. Meanwhile, the trade in the chart is clearly saying, no, this thing is still going up. It's still got room to go up. And you should be really sitting in there for longer, especially if that's what your method says to do. And you get out anyway because you're just happy with your pip and a half. Well, and somebody's going to call me out as well, you say all the time you just take 2 pips or 3 pips because you're happy with getting the 2-3 pips. Yeah, because that's what my method says to do. Not because I'm happy with the fact that I'm only getting 2 or 3 pips. I'm happy because what I've done is my method says, in this particular set of circumstances, get out, take you 2 or 3 pips. And because I do it that way, or my method says to do it that way, and I've tested it, and I can see that, yeah, I can make money doing it, it's okay. But if I've got a method where, in order to go and be profitable overall long term, I got to be consistently pulling, 10 to 20 pips out on trades, and I'm getting only a pip and a half. Well, shoot, what's going to happen is I'm going to take one loss, and I can never, ever make that up because you get trades like that. Generally speaking, your stop loss is going to be somewhere between 5 and 10 pips. And that means that if I take one loss, and I'm only picking up a pip and a half, that means I got to get 10 winners in a row. Well, you know what? You can get 10 winners in a row, but it's unrealistic to get 10 winners in a row consistently all the time. And next thing you know, that's when you flush out your account.
Yeah. Yes, I would agree. But you know what, fellow traders, the fastest 15 minutes in trading is just about up. And so I think we'll definitely revisit this topic with a part 2 and maybe even a part 3. So, fellow traders, always remember and never forget, it's not what you trade, it's how you trade it. So, go out there and drain the banks. This is the Rumpled One, over and out.